Hi, my name is Ed Chin, founder and CEO of OctiFi. Affirm and Klarna have built $20+ billion businesses in the US and Europe. We're building a similar business for Southeast Asia. This region has a population of almost 700 million, but only 10% have access to credit cards. This means there's a huge unmet demand for credit. However, there are a few differences between the US and Southeast Asia market, so we need to adjust the business model. The biggest difference is that e-commerce is still nascent in the region, with most commerce still happening offline. And that's why we've started doing buy now, pay later, focusing first on offline transactions, like someone buying a motorcycle at a local shop. People have used OctiFi to buy furniture or work on home improvement projects they couldn't otherwise have afforded. We do make it easy for merchants to accept digital credit so they can upsell their customers during a natural sales cycle. Their customers can now get approved for credit in less than 90 seconds. Merchants can now close high margin sales they would have otherwise lost. And because of this, merchants are more than happy to pay us a 7% fee for every transaction they do with OctiFi. Our founding team is uniquely qualified to tackle this problem. I've spent over a decade managing billion-dollar portfolio of subprime credit at Goldman Sachs, and my co-founder Ahmed spent his career at Grab and Google as their director of engineering, scaling cashless payment to 8 different Southeast Asian countries. Today, our business is 80% offline, but we think e-commerce will make up a larger percentage in the future. With over 60 million of qualified merchants that can use our solutions, we believe the market potential is huge. Even just by focusing on a few industry segments such as home improvement and healthcare, we believe we have an addressable market well over 100 billion. It turns out that buy now, pay later for offline has precedent in the US as well. There is a publicly traded company called GreenSky in the US that does buy now, pay later for offline transactions like home improvement and healthcare. And these are the same segments where we have derived a lot of early tractions on that fuel our GMV growth. With over 200 merchants on our platform across 4 core industry segments, we're growing our merchant acquisition over 20% month over month. Our strategy of focusing on acquiring offline merchants and big ticket purchases allow us to grow organically in industry segments that have very little competitions. Home improvement might not be a sexy segment, but it does allow us to interface with a lot of high quality homeowners. And we're developing a virtual card that allows these users to go shop online seamlessly. By requiring no integration on the merchant side, we're developing a very easy way for merchants to adopt our solution. Our business model is very simple. We're currently taking a 7% merchant fee on every transaction. And because of the merchant's willingness to subsidize us, we're able to pass on a lot of the savings to our consumers so we can keep interest rate at 0% while still attaining a margin that is close to 40% at the moment. Since launching in Singapore in July 2020, we have already done over $2 million in GMV with over $2,000 transactions, growing over 45% month over month. We're looking to expand to the rest of the emerging economies in Southeast Asia, with Indonesia top on our list and Vietnam following next. While Affirm and Klarna have to compete with an entrenched credit card industry, in Southeast Asia, we can be the first source of affordable credit for many of our users. This means we should be able to win a much larger share of the consumer credit market than Affirm or Klarna have. We are funded by top investors such as Y Combinator and GFC. Do join us on this journey to make credit truly more affordable for the masses. Thank you.
Now you will have a 8-minute Q&A with our judges. So please.
Ed, thank you for the presentation. I think it's a fascinating sector. I've looked at Afterpay in quite some detail in Australia, and I think with Tencent now behind Afterpay, it would seem to me that they've got their eyes on Southeast Asia. How would you intend to compete with effectively Tencent?
Well, I think the model like Afterpay, it's really meant for developed economies. I think part of the reason, to be able to win over Southeast Asia, the model has to be localized. And we see two kind of crucial components. As mentioned in the pitch, one is really a lot of commerce is still happening offline right now. And secondly is the Afterpay model, or the buy now pay later model currently is very focused on e-commerce and have a reliance on having a debit card or credit card for the buy now pay later model to work. So both of those factors need to be addressed. And I also think that like a focus on underwriting and risk is very important, because I think that majority of the Southeast Asia still have no easy access to credit for good reasons. I think both the fraud risk and default risk is quite a bit higher than the developed economies. So being able to address those, I think will be key to winning this race in Southeast Asia.
Thanks. The 7% merchant fee, how sustainable do you think that is over the medium term?
Well, if you look at the sectors that we look at, in sort of the service sectors where they're home improvement or within the healthcare industries, we believe it's quite sustainable. I mentioned in the pitch, there's a model in Green Sky. They're currently valued over $1 billion. They focus exclusively within the home improvement industry, and they're extracting somewhere in the 7-8% still. Part of it is, I think the service space, because of the way how it works right now, there's less price transparency, which makes that fee a bit more sustainable than e-commerce, which even as we speak right now, that margin has been compressing relatively rapidly. So the e-commerce fees right now, it's about 3 or 4%. So we essentially have advantage in terms of being able to extract double the margins in the offline space.
Thanks for your presentation. My question is that since you mentioned that progress is something that needs to be addressed, but so I'm wondering how your KYC procedures that can help facilitate the process as compared to traditional bank and credit cards that can make the process very easy, accessible to normal users, and while comply with the financial regulatory requirements.
Sure. Credit cards is really not something that is widely used, outside of, like, say, Singapore within Southeast Asia, right? Indonesia, there are only 3% of the people have credit cards. And most people who do get access to credit, they tend to be charged very, very high interest. And part of it is really the challenge of being able to handle some of the fraud. Even within the payment space, fraud could run into the 20-30% or even higher range. Our approach is quite different. We don't use the traditional sort of scorecard model that banks use. We heavily leverage on machine learning. We look at a lot of alternative data. And we also have a multiple checkpoint approach that allow us to verify someone's identity over the course of a user journey. And I think that even though in the short period of time since we've launched, in our March cohort right now, our delinquency is below 1%, and that's relative to our competition, which runs in the 4 to 5% range right now. So we think that by focusing on risk, this is the key for us to be able to pass on a lot of the savings to the end users. And that's how we're going to be able to keep the interest rate lows and make financial inclusion possible.
That's very interesting, thanks. Can you talk a bit more about the alternative data that you use and how you make sure that your machine learning models are robust?
Sure. So I think the beauty of what's happening right now is there's a number of data that we are able to leverage. So even given an email and a phone number, we're able to check someone's social media activities. We can check someone's, the decline rate of a given email for its lifetime. We have access to open banking data now in Indonesia. So these are all going to add into our ability to be able to underwrite risk, in real time. And that's sort of the key to be able to bring lending and commerce together. That's how, buy now, pay later works. And my background is I came from the credit lending space, and I actually do a lot of the coding myself. So I personally handle all the algorithm and machine learning work. That's one of the difference with what we do versus some of our competitor, which is a bit more focused on merchant acquisition rather than we kind of put the risk factor first, which also allow us to underwrite much bigger loans than than the microfinance games that our competitors are more focused on.
Great, thanks. A quick follow-up question. In that sense, what algorithm do you use? Do you use neural networks? Do you use random forest?
Well, we have a bit of a hybrid model at the moment. Because there's always a little bit of a cold start problem, when it comes to as a new lender with a lot of data. So we actually use a mix of HGB to do both the machine learning on both the credit limit and also just the binary credit decisions. We don't have enough data to do a lot of neural net stuff at this point, but at some point, if we think there's actual value, we may move to a neural network framework. But I think just given where we are at this stage right now, I think a more traditional sort of machine learning framework will actually do the job quite well. I think a lot of it is really less about the actual model, but more about the data sources and how you will transform the data that feeds into the model to make it work. So that's kind of the key, right? So for example, you have someone's name, even just the name, be able to apply the right sort of natural language processing to be able to transform that into useful data for the model to digest is much more important than figuring out between neural net or a random forest framework.
Okay, time's up. Thank you very much, Ed. We will now move you to another breakout room where you will have a quick chat with one of our colleagues as a debrief. And then, our schedule is very tight. We will soon move to the next startup. Thank you very much.
Thank you, judges. Happy to be here. Appreciate it.